Um, our next speaker would be Dr. Shariq Nisar Saab. I mean, Shariq Nisar Saab is not new to many in this field, in the field of Islamic finance. Alhamdulillah, I've had the good fortune of knowing him since 2008, since we first started the activities here in Chennai under a different name called Manamuna Center for Islamic Banking and Finance. And more than his personal achievements, I have something to relate with him. He has been my mentor, Alhamdulillah, and he's been with us all the years in this field. Jazakallah khair, Shariq Sahab. Shariq Nisar is a PhD from Aligarh Muslim University. He is presently the principal of Rizwi Institute of Management, Mumbai. He's been a professor and visiting fellow member of Harvard Law School, and he is also a regular lecturer in University of Luxembourg and other important universities in UK and forums. Dr. Shariq Nisar's significant contribution to Indian financial sector, serving as a consultant to institutions such as BSE Bombay Stock Exchange, NSE National Stock Exchange, Tata Asset Management Company, Taurus Asset Management Company, and other organizations in the field of Islamic finance, as mentioned earlier, Rehber, Mount Judy Ventures, AICL, and many other forums. He has widely published many research and relevant papers, and he is a visiting member in London School of Economics and other important reputed institutions in UK. Dr. Shariq Nisar is also traveling, and he has taken time amidst this travel. Dr. Shariq Saab, you can unmute and Dr. Shariq Saab. Yes, Dr. Shariq Nisar.
Yes.
Thank you for joining. Shariq Nisar Saab, please go ahead. Thank you.
Thank you very much, Dr. Seth, and Assalamu alaikum, everyone. As Dr. Seth informed, I am traveling, and is clear?
Yes, Shariq Saab, loud and clear. Alhamdulillah.
Okay. So I'm in Aligarh incidentally for some personal matter, and I also got a chance to meet some people here who have interest in Islamic banking and finance. So in the next 20 minutes or so that I'm allotted, the topic given to me is Islamic finance in India, growth and potential. So I'll be focusing my conversation on the line of what has happened in the past very quickly, what is happening now, and inshallah then I will be available for questions from the participants if there are any. So once again, thank you, Dr. Ismail Said Saab, and Bismillahir Rahmanir Rahim. This year, 2023, we, in India, we are celebrating 100 years of the first effort on the line of Islamic microfinance that is recorded in the books of history. It was 1923 when Anjuman Imdad Qarz Bahami Bila Sood, the organization's name, it was established in Hyderabad by a scholar, and his son later on worked on that organization. And thereafter, we see many notable contributions from Indian subcontinent, Indian scholars, be it in academic field, be it in the field of not-for-profit. And later on, much later on, since 1980s onwards, we see for-profit efforts as well. So, Alhamdulillah, with God's grace, institution in this field, since I did my PhD, and he submitted to me his latest book on contribution of Muslim on that as well. But very quickly, I would want to go back to some basic questions that I believe would be very helpful to all of us joining today. And so basically, financial system is very much critical for economic development of any society, any community, any country. If you look around uh, on whatever parameter you wish, and you want to see who are the developed countries and who are not so developed, the major difference you will find between them would be arrangement of uh, financial institutions, financial market, financial players. So all those countries who have been able to develop institutions which helped mobilization of saving from people and pass it on to people who need it for business reasons, and those people who are in need of capital, they get funding support, they produce more goods, they venture into newer businesses, they are able to spend more on research and development, they are able to employ more people, they are able to produce at cheaper cost, they are able to employ even more people, they are able to pay more taxes to the government. So availability of financial sector itself, when it is developed, it contributes to the overall economic development of the society. As against this, any country which is backward in financial developing financial institutions and systems will remain backward economically in all spheres. There are countries who have got natural resources, but if you critically look at their usage of resources, you will see them that whatever revenue they earn, actually it flies out from their economies and it gets invested in the Western world through their capital market or through their financial institutions. So even in cases where countries have got huge natural resources, those countries are not able to deploy those or benefit from those natural resources for their domestic population because of lack of financial institutions in that country. And this is true across the country if you look at. So we have got examples of many rich countries, but hardly those rich countries have developed financial system. What I'm trying to emphasize here is that development of financial system and institutions and market is critical to overall development of any society. Unfortunately, post-industrial revolution, when Muslims lost power and they were replaced in the world politics and business by colonizers or by imperial forces, be they Britishers or French or Portuguese, etc. Ever since, these countries developed their financial models based on whatever they found more workable. And Muslims realized when they critically examined those institutions that these financial institutions are not meeting Sharia requirement. And therefore, Muslims, instead of fighting with those to develop financial institutions meeting their Sharia requirement, they started boycotting those institutions, be they bank, be they capital market, be they insurance or anything. Over 70 years of so effort, the current situation is that Muslims are almost absent from the financial sector in any country. And those countries later on, which are Muslim dominated, but they became independent, those countries also could not produce resources in the financial sector that could develop Islamic way of financing financial institutions to support their financial and economic system. So overall, if you look at Muslims' world is backward, primarily because there is no arrangement for capital mobilization, there is no diversification of industry, and because there is no diversification of industry, they have not been able to further develop their financial institutions. And that is hampering the growth, overall growth. From Sharia point of view, if we look at the major objective, as scholars have agreed, of Sharia itself is protecting people from harm and seeking the benefit for them. That is the primary objective of Sharia. I do not have time to go into those details, but when we evaluate the objectives of Sharia, which is protecting people from harm, and when we look at absence of financial system in those countries, we realize that absence of financial system is actually harming Sharia attainment of Sharia objective, because the requirement of Sharia is protecting people from harm, and not having a developed financial system is actually causing harm to the society. But because the system that we found ourselves in was not compliant with Sharia, we tried to avoid it for the sake of meeting our own akhirat objective, and in the process, the entire community has self declared the financial system as unlawful. Post 70s, there has been 1970s. There has been regular effort to reverse the system, and that is when Muslims started joining financial system. They started developing financial institutions. They started talking about interest-free and riba-free and gharar-free and maisar-free system. They started talking about the impact of leveraging on the society, particularly on overconsumption, which is haram, and also ecological damages that the current financial system has been putting the whole world into. And ever since, we have been talking about that. These have provided great opportunities to Muslims, not only in Muslim countries, but also in countries which are not so-called Muslims. India includes. So when we look at Indian financial system, we realize that there are three major financial regulators, or three major financial segments. Number one is the banking segment. When we say banking segment, we actually mean institutions which actually borrow from people or institutions and lend to people or institutions. So basically, borrowing and lending business on the basis of interest. When somebody does this kind of business, they come under the direct regulation of and supervision of Reserve Bank of India. This is one very important segment of any country's financial system: lending and borrowing with interest. When country's financial system deepens a little bit and it develops, then there is another system, another set of institutions develop and deepens, and that is known as capital market. If you look at Indian capital market, there are more than 5,500 companies are listed. And when companies are listed, it means that they are listed on certain markets. In today's parlance, those markets are known as stock exchanges, like Bombay Stock Exchange and National Stock Exchange. So when you list your company on that, you are allowed to sell your shares through those platforms. And when large number of people buy share, they actually buy share by shares of those people who have founded the companies, or shares of those people who have invested in the company. When these companies perform well, the demand for those shares go up, and the profit for founders and investors go up. That is how capital market works. And in capital market, when we analyze from Sharia point of view, we see that by and large, capital market is Sharia compliant as far as the nature of contract is concerned, because people take ownership by buying shares, they take risk, and whatever return is there, because of taking ownership and risk, they get profit from the activities in which they have invested their money. So this is the second market, or second pillars of financial system. Third pillar of financial system is risk mitigation mechanism, because people day in, day out are facing risk, even when they are working at home, when they are traveling, when they are going abroad, when they are working in offices, etc. And those risks are related to the health. Those risks are related to loss of reputation, loss of assets, loss of valuables, loss of so many things, including lives. So if we analyze India's financial system or any country's financial system, basically there are three pillars or three segments of financial sector: banking sector, which actually borrows and lends money; capital market segment, which actually invests money; and third is risk management sector, which actually is called insurance. In our country, we have three different regulators for all these three activities. Reserve Bank of India is regulator for lending and borrowing, and all the banks are required to report to Reserve Bank of India. They need to seek approval, registration, and also regular expose themselves to supervision of the banking regulator, that is Reserve Bank of India. The capital market of India, where money investments are exchanged through different institutions, is regulated by Securities and Exchange Board of India. And this regulator controls and manages and supervises India's investment activities, whether it is primary market, whether it is secondary market, whether it is mutual fund investment, whether it is venture capital fund investment, whether it is stock market activities, whether it is credit rating agencies, etc. This is regulated by SEBI. And the third one is known as Insurance Regulatory and Development Authority of India. And this institution regulates India's risk mitigation sector, which is generally known as life insurance and non-life insurance, two segments. So any risk related to the person's life is known as life insurance, and any risk mitigation technique to people, businesses, persons, etc., not related to life but other assets, is known as general or non-life insurance. This is the third regulator in our financial sector. In all these institutions, when we analyze, we see the potential, and that is what my topic is today, growth and potential. As of now, when we are talking about, Reserve Bank of India has recommended to the government of India that interest-free banking should be allowed to be experimented in the country. They have recommended. And it is 9 years since Reserve Bank of India recommended to the government of India. Obviously, Reserve Bank of India before this has had to struggle a lot, but finally they decided that instead of calling it Islamic banking, they will call it interest-free banking. And because large number of people's attachment is there to this segment, we better allow Reserve Bank of India to experiment with this. And if the experiment is successful, then obviously we can allow Islamic banking, etc. Unfortunately, the government has not accepted that recommendation, and therefore, as of now, when we are talking, we do not have any Islamic bank or any bank working on Islamic principles in our country, that is India. However, under the same Reserve Bank of India, there is another segment which also deals with lending and borrowing, but not licensed as bank. That is known as non-banking financial institutions. As of now, we have one Islamic non-banking financial institution in our country known as Cheraman Financial Services Limited. Cheraman Financial Services Limited is promoted by Kerala government's entity known as Kerala State Industrial Development Corporation. This entity promoted a non-banking finance company with an idea that this company will accept savings from public and then utilize those savings for the development of industries in Kerala, and also enable people who save money with them to go and perform religious rituals like Hajj and Umrah, etc. This company got licensed in 2009, and after that, this company has been working, and this company has been supported and promoted by a good number of renowned industrialists from Kerala. So it is a public-private joint venture where KSIDC is the founding partner, but it has also allowed private parties such as Lulu, such as Gulfar, such as Menons, and so on and so and so to become part, and they operate a company called Cheraman Financial Services Limited company. This company is mainly into the business of raising capital through shares by issuing shares. That is one on the liability side. And on the asset side, whatever money it has raised through issuance of share, that money will be utilized to finance assets of different kinds. The company has also developed a work property on the basis of build, own, operate, and transfer. That is known as BOOT, B-O-O-T. There was an empty land owned by a Waqf, this company developed that land into a commercial property by constructing malls and other things. And these malls have been rented out, and the company is getting profit from the rents received from the tenants. After 20-25 years, when the company has received all the money that it has invested plus certain agreed profit, the company will finally get out of this business, and the whole property that is created will finally hand it over to the Waqf board. Unfortunately, at a time when Waqf are in bad news, this one example itself should have been enough to tell government that government has this model also, where Waqf board's land can be developed by financial support from financial institutions, and both the parties can receive benefits, etc. So when we look at the India's financial sector, one sector is Reserve Bank of India. There is no bank working on Islamic principle, but there is a non-bank which is working on Islamic principle, that is known as Shariq Financial Services Limited, as of now. When we analyze the second pillar of the Indian financial sector, that is capital market, that is where we see the highest potential for Sharia compliance business opportunities. Very recently, when we were doing some researches, we realized that in all the major Muslim countries, 7 major Muslim countries, including Indonesia, Malaysia, Pakistan, Bangladesh, Nigeria, 7 largest in terms of Muslim population, have got less than 2,500 companies listed altogether, 7 countries taken together. When you further analyze these companies, then we find that on the basis of Sharia, there are hardly 500, 600 companies that meet Sharia compliance requirement of the total listed stocks. As against this, when we compare India alone against 7 major Muslim countries together, then we see that the total listed stocks at BSE itself is more than 5,600, as against all the Muslim countries taken together. When we do Sharia screening of these 5,600 odd stocks, we find roughly 2,000 plus stocks are Sharia compliant on the most strict criteria. That tells that in capital market, India alone provides more opportunities than all 7 major Muslim economies taken together. And these companies which pass Sharia screening criteria, they come from very diverse business, such as IT, pharma, cement, steel, FMCGs, real estate sector, etc., etc. And when you analyze offerings in Indian capital market, as of now, we have 2 Sharia compliant mutual fund schemes, Tata Ethical Fund and Taurus Ethical Fund, which are purely working on Sharia basis. And these 2 schemes, Tata has about 3,200 odd crores rupees investments, and Taurus has about 250 crores odd investments in those funds. So there are various opportunities in the Indian capital market as far as growth and potential for Islamic finance is concerned. The number of companies passing Sharia screening criteria is almost than double the entire 7 major Muslim economy. The fund under management is also, there are 2. We have got 2 in the stock exchanges, BSE and NSE. BSE has got 1 Sharia index known as BSE 500 Sharia. NSE has got 3 Sharia indices known as Nifty Sharia, 500 Sharia, and Sharia 25. And then we also have a couple of venture capital funds, including Mount Judy. They do not present themselves as a pure Sharia venture for marketing reason, but this is one of the Sharia compliant venture capital fund approved by Securities and Exchange Board of India.
Alhamdulillah.
So in the capital market segment, we see the highest number of companies with passing Sharia screening criteria. We see the presence of several Sharia indices. We see presence of a couple of Sharia compliant mutual fund schemes. And last week only, we have got approval from SEBI for another Sharia fund in our country. And hopefully, inshallah, in next 10 to 15 days, you will be hearing about third mutual fund in our country, which is exclusively on the basis of Sharia screening parameter, Sharia audit, Sharia certification, etc. This is going to be the third one. So in capital market, we have large number of, or I can say that we have all kinds of products available, right from listed stocks to fund management to venture capital fund to mutual funds, etc. When we analyze the third sector of the of Indian financial system, we see that third financial pillar in India is insurance sector. And in insurance sector, as of now, when we analyze India's insurance sector from Sharia point of view, we see there is a lot of gap which needs to be fulfilled before we can say that there is a really credible Sharia option as far as investment sector is concerned. As of now, all insurance companies in India are actually working on the basis of commercial insurance principles, which does not meet the Sharia compliance criteria. Sharia compliance criteria is basically mutual insurance concept. And in our country, mutual insurance concept is not permitted as of now, as per the 2015 Insurance Amendment Regulation. But in this segment also, there is one company which is owned by central government of India, known as GIC Re, General Insurance Corporation, and which this company is owned by central government and in the business of providing insurance to insurance companies. When insurance companies go to insure their own business with another insurance company is known as reinsurance company. And here, the government of India owned company was losing businesses in the Middle East to its counterparts or competitors from Western world and European worlds like Hannover Re, Munich Re, Swiss Re. These all companies are into reinsurance. That means providing insurance to insurance companies. And when GIC started losing business because Islamic insurance companies started avoiding giving business to GIC, and they started going to the companies, reinsurance companies, which were offering some facilities and support to Islamic insurance companies. That time we worked with GIC, and GIC came up with an Islamic reinsurance option. And this company is into thousands of crore rupees business, mainly in Islamic insurance companies from Malaysia, Middle East, Sri Lanka, and other countries. They seek business, they reinsure themselves, meeting Islamic criteria with GIC Re. So as of now, when we look at entire India's financial sector, dividing it into three pillars, we see there is no Islamic bank or interest-free bank. We see there is one Islamic non-banking finance companies. Then in the second segment, which is capital market, we see almost all kinds of Islamic Sharia compliant options available in the Indian market. And when we analyze the insurance sector, which is third pillar, we see there's only one active player at the moment, and that is Government of India owned GIC Re. Okay. This is in the as far as government and formal financial sector is concerned. Then there are institutions promoted by community. Dr. Ismail, please inform me when you
yes, Shariq sir.
We are to stop.
We're just exceeding time, Shariq sir, but it's very useful information. That's why I didn't interrupt also.
Okay.
Jazakallah. Yes. Yeah. Yes, Shariq sir.
I'll just give me 2 more minutes.
Yes, Shariq sir. Yes,
so
please.
Whatever I spoke till now is about the formal financial system, which is under the supervision of India's regulators and operated by professionals, irrespective of the community they belong to. In addition to all this sector, there is another sector which is purely contributed by community-owned institutions. And we see in the last 10 years, there is a large number of Islamic microfinance institutions promoted by different groups. And the most important group among them is known as Sahulat, which has got 111 branches in different countries, operating through 57 Islamic microfinance cooperative societies and having accumulated savings of more than 300 crores and loans interest-free and Muraba and a Sharia compliant loan to the tune of 260 crores. This is one of the largest. Other than this, we also have other institutions like Janseva and others, which are active in Islamic microfinance space. We also have a notable organization named Rahbar, which is actually started as a platform for peer-to-peer investment, but later on has diversified itself to seek investments from or to arrange investments from different like-minded people and passing it on to people who meet Sharia compliance criteria and then getting sharing return, Sharia compliant return. So I will stop here if there are questions. And thank you, Dr. Ismail Said, for providing me this opportunity. And I really extend my apologies for exceeding the time limit.
Shariq Sahab, in fact, you made us everyone feel more motivated that this is happening in India. Alhamdulillah. I mean, that's what is more important than merely on Islamic finance being on at the academic level, where many are presuming it to be. Of course, we have some questions, but I'm not taking it with you, Shariq Sahab, now. I would send it to you and expect a reply later, inshallah, due to the time constraint relevant to your topic. In fact, we have to thank Shariq Sahab for sparing this time and sharing what he knew all these years with this limited time. In fact, what we will do from Tamil is have his speech converted into a text, send it to him, and if once approved, we will circulate to everyone. I mean, it's a very valid piece of information, Shariq Sahab, you shared. Jazakallah khair.
Thank you very much.
Thank you, Shariq Sahab, for joining amidst your travel. Please remember us in your prayers, and we are always with everyone who knows Islamic finance. They are praying for you. Jazakallah khair.
Thank you very much. Thank you very much. And
thank you,
Shariq. May Allah bless all of us.
Ameen.
Thank
Ameen.
you. Assalamu alaikum.
Alaikum salam wa rahmatullahi wa barakatuh.